topic that sometimes catches students is how to actually record the fair value adjustment at the end of the year. So let's look at another example of an equity using the fair value option and just look and see how would we record that year-end fair value adjustment based on different fair values. So let's look at this example. The accounting records of Brazilian Importers Inc. at January 1st of the current year, so 2019 for example, included the following. We had assets. We had an investment in Ladle common shares of $1,614,000. That's what we paid for the investment. Less fair value adjustment. So we held these positions last year and we adjusted them by 174, which means they've already lost 174,000 of value. Now we're carrying them at 1.44 million. So 1,440,000. All right. So no changes occurred during the year in the investment portfolio. In other words, they haven't actually recorded any changes in fair value to this point. So we need to record, prepare the appropriate adjusting entry at December 31st, assuming the fair value of Ladle common shares was. So let's look at each of these independent values or fair values at the end of the period and see, well, how would we adjust? So at December 31st, the fair value of our Ladle common shares is $1,410,000. How would we go about adjusting our fair value for these positions? Well, always take into account what you've already adjusted. So at this moment in time, so if I were to just tab over a little bit, at this moment in time, we're carrying these shares at $1,440,000. We've already adjusted them by 174. So keep that in mind. If that weren't the case, we'd have to use 1.6 million there. But we've already adjusted them down to 1,000,004 last year for losses already taken. So we only need to start there and compare it to the 1,410,000. So this year alone, we've lost an additional 30,000. So we need to bring our value down even further from the 1,440,000 down to the 1,410,000. So in that case, it is a loss to us, an additional loss. So we're going to hit an unrealized holding loss. And again, when we're dealing with equities carried at the fair value, it does show up in the income statement. So make sure we put in there that it's the income statement that's being impacted for 30,000. Now, what are we going to credit? Well, to represent a change in fair value, we hit the fair value adjustment. We do not ever hit the actual investment account. That needs to be carried at its original cost, but we do need to bring the balance sheet value down. So we're going to hit the fair value adjustment for 30. What that does is brings it down to the 1,410,000 fair value that we need to show. All right, so let's ignore that happened. Reset, we're still at the 1,440,000. Let's look at option 2. Well, what if we got to the end of December 31st and it actually shows up as 1,530,000? So to view this a little bit better, let's split our screen here and let's put that 1,530,000 on the bottom and go back up to our information at the top so that we can keep that in view. So again, if this were the case at December 31st, we're already carrying the position at 1,440,000. Okay, so is our value going up or down? Well, in this case, if we were to subtract that 1,530,000, we notice that our value went up. Okay, so we need to report a gain, and the gain in this case would be 90,000. It needs to go from the 1,440,000 that we're carrying it up to 1,530,000. So if you really wanted to, always follow the same thing. If you do 1,530,000, the fair value minus the cost, if it's positive, it's a gain. If it's negative, it's a loss. So it's positive in this case, 90, so that's going to be a gain. So we need to increase our balance sheet from 1,440,000 up to 1,530,000. So to do that, since it is the asset side, we would need to debit the fair value adjustment for the 90,000, representing the change in market value. Now in this case, it's going to be an unrealized. Again, we didn't sell it, so it's still unrealized, but it's a holding gain. And again, it's reported in net income, so we need to put in there that it's part of net income for 90,000. All right, so let's reset one more time. And what happens if it was 1,650,000? Now, again, the point of these three, I know they're very similar, but we always base it off of what we had carried at the end of the last period or what's sitting in our books. Right now, we didn't reverse out this 174, so we're still carrying this at 1,440,000. So we're going to take our new fair value, 1,650,000. We're going to subtract what are we carrying this at, 1,440,000, and that's going to give us a change of 210,000. So granted, I know from the purchase price we haven't gained 210, but from the last time we adjusted, we have a change in that value of 210,000. Okay? And we'll talk about that here in just a minute. Well, what does that mean? So December 31st, again, this is an increase in fair value. So we're going to hit our fair value adjustment because we're actually increasing the value of our asset. So it needs to be a debit. And then we would have recognized, again, an unrealized holding gain. And it has to be reported as part of net income. So we're going to denote net income for 210,000. Well, why is that? Well, I know if we really think about this, if you take our fair value, what we would sell it, if we were to sell it today for 1.6, and we subtract our original price on this position, we would actually recognize earnings. So take 1,650,000 minus that 1,614,000, and we've really earned just 36,000 gain in total. The problem in accounting is we can't just recognize it in total. We have to recognize it in the year in which it's earned. So if you go back and look at this, let me move this up a little bit so I have a little touch more space here. So if we look at it in year one, or last year, I guess, instead of this year, let's do last year, we lost 174,000. Now, to get to a gain, this year we're going to gain 210,000. Notice that's what we put in our entry, 210,000. So if you take the difference between 210 and the 174, notice over the life of the position we had a gain of 36,000, which is what we want to report. But income, revenue, typically speaking, revenue is recognized in the period that it's earned. For fair value option accounting, we consider it earned. We have to report that as income in the period in which the position gains and loses value. Now, it would be disclosed that it's an unrealized holding gain, but it's still reported that way. So our loss of, we lost 174, let's just, for sake of ease here, we had a loss of 174 last year. We had a gain of 210, but over the life of the position, we show a true gain of 36,000. On this position at this point, even though it's still unrealized, but that's sort of how it would flow year over year for a total gain of 36 at this moment in time. I hope that helps clarify why we're doing these adjustments the way we are.